Hello everybody, this is Lara, Elliott Wave Gold, soon to move to pureelliottwave.com with an analysis of Bitcoin for you on the 5th of August 2021. I'm going to do this video in the format that the video will be provided, an analysis will be provided for the new membership, Pure Elliott Wave Weekly, which will include once a week analysis of Bitcoin, S&P 500, gold and oil. Let's jump into it. Elliott Wave analysis first, classic analysis last. Before we do that, the summary expects that we do have a strong support for last lows for Bitcoin, and so the most likely scenario for the correction, which I expect incomplete, is a big triangle, which could last for months. Let's take a look at that. First, the monthly chart, the biggest picture for Bitcoin, and I won't show this chart every week, but I'll update it once a month. And so let's start this analysis with a monthly chart. From this low to this high, we can see a complete 1, 2, 3, 4, 5 wave structure. That's a 5-step forward movement, an Elliott wave impulse, which I'm labeling cycle wave 1. It lasted several years, and that's how long you'd expect a cycle degree wave to last. And here is cycle wave 2, a deep correction. This is a semi-log scale, so it doesn't look as deep as it actually is. Cycle 2 is a 0.84 correction, or 84% correction of cycle wave 1. So that is very deep by any definition, and that's over now. Cycle wave 3 underway with 1, 2, 3, 4 unfolding, and then 5. Now, if my wave count is wrong, it may not be bullish enough. I may need to move the degree of labeling here within cycle 3 down 1 degree. We could just have primary wave 1 completing when I consider how long I expect cycle wave 3 to be. But for now, I will leave this degree of labeling as it is, and the invalidation point would be the same anyway. Cycle wave 3 may only subdivide as an impulse, and within it we may have primary 1 and 2 and 3 complete, and primary 4 would most likely continue sideways or lower so that it has reasonable proportion to primary wave 2. Primary wave 4 may not move into primary wave 1 price territory below 13,796.489. Let's take a look at the weekly chart now, with a low for primary 2, and this was a 91% correction of primary wave 1. The low for primary 2 is this point down here. So now we are looking at the structure of cycle wave 3 unfolding as an impulse on the weekly chart. An impulse for primary 1, a zigzag for primary 2, which is a very deep correction of primary 1, and it was 37 weeks in duration. A nice impulse for primary wave 3, and now I expect that primary 4 may be unfolding sideways as a triangle. I may need to relabel it as a combination. They're also sideways movements. I'm expecting most likely now sideways movement for primary 4 because we've got some very strong support and strong lows down here. But if it does move lower, then it may not move into wave 1 price territory below the invalidation point. My targets for Bitcoin are highly provisional. I'm just going to quickly pop back to the monthly chart. When I was analysing it on a very regular basis up to this high in December 2017, I gave up in the end on target calculation because it blew all of my targets away. It doesn't exhibit often Fibonacci ratios between its actionary waves, that's 1, 3 and 5. 5 has no Fibonacci ratio to 3, and 3 exhibits no Fibonacci ratio to 1, which really does make target analysis very, very difficult. I would rather use classic technical analysis to eventually identify the high of cycle wave 3, and I did manage to do that for cycle wave 1 6 days after it formed. My analysis on the 23rd of December expected a sustainable high in place, and those prices weren't seen again for 3 years, so that was good analysis. Okay, let's take a look now at 3 scenarios on the daily chart for primary wave 4, and the first scenario where it begins here, the last all-time high for Bitcoin here. This first scenario is now my preferred main Elliott wave count, but it's absolutely essential to work with alternates when you think particularly a fourth or a B wave is unfolding, because there are more than 23 possible corrective structures they can be. This is really no different to normal understanding within classic technical analysis or investing and trading. When the market is in a consolidation, it will swing from resistance to support and back again. Elliott wave tries to give structure to those swings, but you have to be really flexible during a consolidation. From this high to this low, I'm counting a 5-wave impulse. 1, 2, 3, triangle for 4, 5, slightly truncated. I'm going to allow for that because to try and see 4 over here with the first high here and ending here, I just cannot see a complete Elliott wave structure, a corrective structure fitting this movement and meeting all Elliott wave rules. And so with all other options for this movement discarded because they just don't meet the rules, this is the wave count I'm going to use. And here's wave C, which does move below the end of A. There's actually a 0.382, I think it's a 0.382 Fibonacci ratio between A and C. And so we have a zigzag complete down here at this low, and I'm expecting a single or double zigzag up now for intermediate wave B. My research shows that the most common or the average length of B waves within triangles for Bitcoin is 0.8 the length of the A wave, and so again this target's provisional but not as provisional as my targets for impulses. This target for B expects upward movement to around about 57,669, give or take a couple of hundred, possibly maybe even 1,000 or so, but around about that target. And when B is complete, a single or double zigzag down for C, a single or double zigzag up for D, which may not move reasonably beyond the end of B, and finally a single or double zigzag down for E, which may not move beyond the end of C. Oh, and C may not move beyond the end of A, below 28,893.621. This triangle would be invalidated at this stage with a new low below that point, and if that happens, then either of my other daily wave counts would be used, or I may need to relabel primary 4 some kind of combination X, Y, Z, but we're not there yet. We have to be quite flexible when corrections are unfolding. At this stage, I expect this wave count has a reasonably good probability. Either way, I don't think primary 4 was over here at this low. Let's take a look at the next idea where this high here, the end of primary 3, again this point here, and again a 5-wave impulse over. I've moved it up 1 degree. Now I'm considering what if primary wave 4 is just a single zigzag, A, B, C. If A subdivides as a 5, then B may not move beyond the start of A above a new all-time high, and then C would be expected to move below the end of A to avoid a truncation. The target expects it would do that. B here is seen as a double combination, zigzag, X, flat correction for Y. This is a regular flat actually, A, B, C, where A and B both subdivide as 3s, and C is unusually long for a regular flat. This doesn't have quite the right look. The first wave count also has a better look in terms of Elliott wave structure, but this second wave count does meet all rules, and it is entirely possible. Let's consider all possibilities. We need to be open-minded and flexible. The third idea, where primary A is over up there, this point here. Now I'm looking at the possibility for a double zigzag for primary 4. A, B, C, the first zigzag in the double may be complete, labelled intermediate W. X may be a complete 3 in the opposite direction, and A, B, C, another zigzag may move price lower for intermediate Y. The target expects it to do that. The purpose of a second or third zigzag in a multiple is to deepen a correction when the first doesn't move price deep enough, so the target expects Y to achieve its purpose. Just to note, it bears repeating, the most common error I see in work online calling itself Elliott wave is labelling W, Y or Z within them, W, X, Y, X, Z, and the overuse of labelling W, X, Y, X, Z. There is a rule stating the maximum number of corrective structures in a multiple is 3, but if you label multiples within multiples, you've multiplied the maximum number beyond 3 and violated the rule. It's often misunderstood and commonly broken. W, X, Y, X, Z triples are actually pretty rare. I've seen a few triple zigzags in the years and in my research, but I have seen very, very few, I think maybe only 1 or 2 triple flats or triple combinations. They're really uncommon. So if you see work with a lot of W, X, Y, X, Z, just avoid it, would be my advice there. Let's move on to classic technical analysis. at the monthly chart. I'll take a look at the monthly chart in this analysis, and then the next time I'll take a look at it will be the end of August and the first few days of September, and we'll look at August's candlestick, which is so far incomplete. At this high here, we see RSI reach overbought. We see ADX just reach extreme, and then it just managed to reach above both DX lines. We saw a fairly good strong slope to this upward movement, and then given those extreme conditions, we see an evening doji star, a bearish candlestick pattern form, and so it's reasonable to expect some consolidation or pullback after those extreme conditions and a bearish candlestick pattern. On the evening doji star, this third candlestick has support from volume actively pushing price lower. That's impressive to see. On these three candlesticks now complete, we have bullish long lower wicks, and so it looks suspiciously like we may have a floor here for price. This support around, I think it's 28,800, may continue to hold. On balance volume broke above resistance here, tests support and starts to move up and away last month. So price has got support, on balance volume has got support. That supports that first daily chart of my Elliott wave counts. RSI back in neutral territory, as is stochastics. At the weekly chart level, yes, support is 28,900. That looks pretty strong. At this high here at the weekly chart level, RSI had reached overbought and there exhibited double bearish divergence between these peaks in price and peaks in RSI. ADX was very extreme, above both DX lines and above 45, although this market can sustain very extreme trends while price moves a considerable distance. But when we see it reach very extreme and RSI exhibits that divergence, and we see this vertical spike and another vertical spike here, and then we see multiple divergence with RSI, it looks pretty likely that we're going to get a downward reaction, and that's exactly what we're getting. We didn't have a bearish candlestick pattern though on the weekly chart. I think we do have one on the daily chart. We'll get to that next. This candlestick here has got a long lower wick, finding support about 28,900. There's a nice hammer candlestick pattern at the last low for Bitcoin. That's a bullish reversal pattern. And then we get this bullish engulfing candlestick pattern with a bit of a long lower wick, also support around about the same area. And it has a little bit of support from volume. The following week, now complete, also has good support from volume. So it does look like price has found good strong support, and we may have a floor here about 28,800 supporting that first daily chart. That's why I've switched it over to be the first preferred daily chart. On balance volumes also at support at the monthly and weekly chart level, again supporting that first daily chart. RSI back in neutral territory. There's room for a trend to develop again, except ADX hasn't been brought down below both DX lines. So I would expect some more churning to set up for the beginning of a new trend before we see a new sustained trend develop. And that also tends to support that first Elliott wave count. ATR declining as price moves sideways, normal during a consolidation. For this market, actually also normal during the early stages of its trends. It can be a bit confusing in the early parts of its trends. And stochastics in neutral territory. What about the short-term picture on the daily chart? Bullish long lower wick may be forming on the current daily candlestick. I don't expect that's going to change much, but to be confident of this interpretation, wait till the session's closed and then just check that it did remain so. And it looks like it's going to have support from volume for overall upward movement. Price is consolidating with resistance about 42,500, support again 28,900. Swinging from resistance to support and back again. ADX is telling us, though today there may be a new upward trend, although for most of this it's been declining. If there is a new upward trend, it's already extreme because the ADX line is above both DX lines. So this is not a strong bullish signal from ADX. The strongest bullish signal ADX can give is when it comes up from low levels, rising from below both DX lines and starts to rise up. That's a really bullish signal, indicating an early stage of a new trend. This, not so much. It could just be indicating an upward swing within a larger consolidation, so a short-term trend. I would look for resistance to hold about 42,500. We have a death cross here with the 50, I use 55 because it's a Fibonacci number, the 55-day moving average crossing below the 200-day moving average, supporting a bearish analysis. But at this stage, all moving averages are again positively sloped. However, the mid and short are below the long and price is below the long. So overall it's bearish, but it's not fully so. It's somewhat inconclusive. RSI back in neutral territory after just dipping into overbought while price reached up into resistance, and stochastics reached up into overbought as well. And so it looks likely that we're going to expect a downward swing. Now that view may change if price breaks above resistance at 42,500, and it could do that if ADX is going to indicate a more short-term trend, and RSI has got a bit of distance to go before it again reaches overbought, and so that could support the first Elliott wave count. This chart gives reasonable support, particularly the floor here at 28,900, but my expectation from that Elliott wave count of an upward swing to end somewhere above 50,000 but below 62,000 doesn't have quite as much support from this chart. And so I've given you a couple of other options to work with. We need to be flexible when price is in a big consolidation. That's all from me at the end of the day here for Bitcoin, and I hope that all of you are having a fabulous day.